Make notes. Come on.
I think now we should start, sir. Because it's enough people are joined. So, Parminder ji, shall we start now?
Yeah, sure. I'm ready.
So, good afternoon, everybody. Today with us, we have Parminder Singh, co-founder ZippiAi Inc. And he's going to share his views on how much money do I really need your startup means, and when you need it and why you need it. So he'll be talking on this. I've just is doing in his profession. He is a co-founder ZippiAi Inc. and he has been a startup and which is building up its startup in the area of maintenance of the industry. He's joining, and he's current member of Next AI, TechStart's Alchemist Accelerator and Joel Accelerator. He has been a winner of national winner in the Ministry of Defense Challenge organized by Niti Aayog by Government of India, and he has also a successful entrepreneur and able to fetch many I would say fundings. He is now have got third round of the funding, if I'm right, Parminder.
Sorry, come again.
You have got the third round of funding for your startup now, right now.
We are in process for that.
In your process for that, okay, fine.
Yeah.
So he's one of the alumni of Punjab University. This I want to share again with you people, and working well in this entrepreneur startup program. And over to you, Parminder. Tell us participants that why they need money for their startups, when they need money for their startups, and how. Also, if you can throw lines on this. So over to you, Parminder.
Thank you, Dr. Ajay. Thank you so much for this wonderful introduction of mine. Just wanted a quick checkup. Am I audible to every one of you?
Audible. You are
Yes,
audible.
Yes. Okay, awesome. So thank you everyone for having me here for this interactive session that we are going to have about fundraise. Well, that is a very common dilemma of every founder out there. You can say even the now, if you started the journey of fundraising, right, or you can say started the journey of building your own venture, you will be probably dreaming about how much money I need, why I need the money, what to do, what not to do, whether I'm doing it right, whether I'm doing it wrong. So this is known as the founder's dilemma, right? So in the couple of minutes next to this, I'm gonna take you through the journey of fundraise, the parameters that investors are looking into, why we need to raise funds, for what purposes and all, right? So for all the budding entrepreneurs, I request you if you can just turn on your camera so that I can check out the budding entrepreneur so that whenever they connect with me, so I know that yes, you guys are the one with whom I have attracted. Awesome. Thanks.
I request everybody to please on their cameras. That will be really.
So my screen is visible to everyone.
Yes, Parminder, it is visible.
Okay, thank you so much. So as Dr. Ajay mentioned, I am co-founder of ZippiAi. At Zippy, we are building conversational AI engine for manufacturing facilities, where we are providing them the digital assistants for their day-to-day work routines, right? You can now probably be the part of the AI revolution that whole universe is facing, specifically the technical side of it. you can see the digital workforce is going to be the next future of what we are hoping for, right? And at ZP, we are building the same. We are building the digital AI assistants, your digital workforce for manufacturing facilities to help them and assist them in their day-to-day troubleshooting activities, their day-to-day processes, their operations on the shop floor, right? So, few things about me, as Dr. Ajay has already covered that. I hold my bachelor's in electronics and communication from Punjab University, and thereafter I did masters in AI from HEC Montreal, and couple of awards given by Government of India as well as Government of Canada. So altogether, I have around 7+ years of building industrial IoT AI solutions, checking out what works, what not works, right? So, furthermore, our startup is awarded by Next Canada as the best enterprise productivity AI startup. And we are backed by Alchemist Accelerator, Texas, Next AI, and Jules Accelerator in North Carolina. So these all accelerators are the world's best pre-seed investors in the startups, which transform the journey from an idea, helps in transforming the journey from an idea. Yeah, so we have been the part of such a large investor community as well as the founders community based in US and Canada. And these are some of our news featured, some of our work featured in the Business Journal, the Geek Wire, and the Your Story out there. Wow. The founder's dilemma. How much money do I need for my startup? When and why? Can anyone have a answer to this? You can just give me a thumbs up in the chat section, right? So we're gonna keep this a very interactive session so that we can grasp a lot of things. What I have experienced till now, what knowledge I have built throughout going through the procedure or the process throughout this journey, I can share pretty well with you guys so that you can just grab that knowledge which I have been experiencing from the last 7 years of my life. So that is the founder's dilemma. Like, how much money do I need for my startup? Whenever we are thought of starting something, that is the very common thing. How much money I need, why I need, when I need, right? So, by step, I'm gonna take you through the particular process, and the step involved in fundraising, right? Why we need this, when we need this, and what are the best sources for having funding for my startup, right? That we can go through. So starting with why we need funding for our startup, right? So when we have an idea of building something, right? We thought of something that, okay, I got this idea. Now what that idea remains in your mind. Now you want to show some prototype of this, some concept, some working model or working service type of it, so that you can just present it to the world out there. So for prototype creation, funding is required over there, right? And then when you verify that, okay, prototype is successful, right? You build it and you start getting response from the market, or you get some insights about, you got the confidence basically on your product. Then you go for product development, the complete product development cycle out there, right? So sometimes you outsource some of the part of your product development, some of the part you build it in-house. That totally depends upon startup to startup. And then there comes the requirement of fundraise out there, right? The third thing is the team hiring. Now the startup is not a single or individual journey. It is the team who gonna build the organization first. Your first 5 or 10 team members are the one who gonna structure the foundation of the startup, right? So team hiring is a very, very crucial step at the startup. Those whosoever are building their ideas around something else, right? So team is very, very crucial for having converting that idea into a reality product out there. And thereafter, you need working capital for this as well, right? You have your day-to-day operations, you have your multiple tool purchases, right? So working capital is required for keeping the startup running, to mitigate the day-to-day expenditures as well as targeting the goals that you have fixed for your startup. Thereafter, funding is also required for your legal and consulting services. As you stepped into the journey of becoming a founder, so there are a lot of legal services that you need to take. For example, you have to secure your idea, you go for IP filing.
Parminder?
Audible now?
Yeah, Parminder, you are audible now. Your
Dr. Raji,
PPT is
can you
not.
check if you can?
No, your PPT is visible. You are audible, and we can see you also, but your PPT is not visible right now.
Okay, I'm resharing again. I don't know, in between it suddenly got stopped.
Now it is
So
fine.
can you just help me out? What is the last part that you heard from my side?
Uh, where did why you're requiring funding, and where like you are into team hiring, where we.
Oh, okay. So I reached over to legal consulting services. I don't know, my connection got disconnected. I don't know why. So now it's audible, right?
Yeah.
Correct. So team hiring is what I just mentioned, that you need best team hiring, best team members for building your own startups, right? And working capital is required there again for keeping your day-to-day operations running. You have to purchase tools for sales, for marketing. Then you have to purchase tools for your CMMS systems, your ERP system, HR systems, right, to manage your team and keep your organization running. So working capital is required over there as well. So there comes the legal and consulting services. So you have to make sure that your idea is secured. You go for registering your startup. You go for IP filings and then trademark filings to make that your ideas is secured. So different type of consulting services and legal services are part of the process. And then you have to go for the raw materials and equipment purchase at your side to build your product. And thereafter, there comes the license and certifications. Once you build your product, you have to go through a lot of licensing procedures to make it feasible for the market, to make it roll out for environment friendly initiatives and all, right? So licenses like ISO certifications, your quality certifications are required there to give a authentic label to your products out there. And then funding is furthermore required for marketing and sales, right? That is the core backbone of what you have built. You have to present it to the world that, okay, this is what I have built, and you build the sales pipeline throughout it. So I think that is also clear to everyone that why we required funding, because without funding, we don't know how to move further. Or if we know how to move further, but for time, for the efforts that we are asking for providing these kind of services, they definitely comes along with uh, the price that they. Yeah, I guess I'm audible. So now we're gonna take a look into what type of funding requirements are possible, right? what kind of funds are available with us in the startup ecosystem. So there are like three type of startup fundings available. Number one is the equity financing. Number two is the debt financing, and number three is the grants that are available with us, right? So just make to sure that you know what equity financing is. So in equity financing, you sell a portion of your company in return of capital, right? Whereas in debt financing, you borrow money and pay it back with an interest to the lenders, right? And on the grant side, you receive a financial grant. It is given by uh, maybe a government or a private events, right? Or the private companies out there, those who provide the grants out there, right? So for equity financing, there is no repayment of invested funds because they have the portion of your company with them. And at debt financing, you have to repay back it to the organization with interest. And in the grants, there is no repayment component involved for the invested funds, but they will be looking for the goals that you have set out there for achieving that traction that you promised to them. So the risk involves in equity financing to the financer side. There is no guarantee against his investment, right? The investor has put money into your business purely on the basis of your business, your team, your market, the target, your target valuations and all, right? But there is no guarantee with the investors that they will be asking their money back. It's a purely on the risk basis. If the business succeed, they will also succeed. If business gets closed, so they will be losing all the money they have invested. And for startups, what risk is involved? They are compromising with the equity, their ownership of the company. So sometimes startup founders do that, like to raise funds, they sell majority of the company stakes for to the investors, right? Where they gain the control out there of the company, right? So in the equity financing, there is a role of investor getting into the day-to-day business operations as well. So in the debt financing, so the financier has no control over the business. Financier has given you the money, and he will be just calculating the interest that is being generated over the lending amount, and that you have to repay back to the debtor, the financier out there, right? And they may ask for business assets or collaterals while giving you the access to the funding amount out there, right? So that is usually I think when the debt financing is taken by any of the founder. So in the grants, there is risk on target achievement that you propose to the government, right? To the on the financial side, whether you are able to achieve that goal or not. So that is the risk at the financial side. And for the startups, they may not receive the complete grant because the grants are based on the chunks they are getting delivered on the milestone basis. If you clear the first milestone, then the second tranche of the grant will be relieved by the financer. So in the equity financing, the commitments are like the startups are under less pressure, right? And to adhere to repayment timeline. So they are more focusing on building their business instead of getting pressurized under repaying it back to the investors. And whereas the investors are constantly trying to achieve the growth targets, which startup has set, they are keep on monitoring that, right? And in the debt financing, startups needs to constantly adhere to the repayment timeline. So whatever the timeline has been set by the financing financer at the debt funding, startups are under the pressure to mitigate that, to repay back that funds to the investor out there, which results in more efforts to generate cash flow to meet interest and repayment. Whereas in the grant sides, grants are distributed in different tranches, right, with respect to the fulfillment of the corresponding milestone. So their startup is constantly working to achieve the milestone laid down. So there is no such kind of pressure on the startup to repay it back to the granting authority out there. So what investors will get in equity financing is the equity amount, the capital the founder is raising for the growth of the investor is what they will get. If investor has put some amount, they will be looking for 10x of that amount as an exit from the startup, right? And in the debt financing, there is interest payments that they are looking for, whereas in the grants, there is no return that the government or the organization is looking for, right? Uh, Involvement, if we talk about for the equity financing, uh, the equity investors usually prefer to involve themselves in the decision making process. So if the equity investor is coming as an investor to the portfolio of the company, they may probably ask for a board seat, right? So they will be involved in day-to-day decision making. They may be involved in next funding round, raising that, right? So they are involved, and if you have diluted a significant amount, then they can have control over your company as well. Whereas in the debt financing, there's very less involvement in the decision making. They are only focusing on whether you are giving the interest on time or not, right? So there is no that much involvement in the decision making of the board of the company. And whereas in the grant side, there is no direct involvement involved in the decision making, but they will be checking out your goals that you have set. So periodically, they will be asking for the reports that you have prepared or the goals that you have reached. So the sources for equity financings involves angel investors, self-financing, and self-financing is also an option there. Family and friends, then there comes the venture capitalists, crowdfunding, incubators, and accelerator. And in the debt financing, usually the source of fundings are banks and non-banking financial institutes. Government loans and schemes are also there in debt financing source. Whereas in the grants, so there are involvement of central government schemes, state government grants given to the startups, corporate challenges, grant programs of private entities like the large large enterprises. They also hold their grant programs out there. So any question till now, team? Just want to make it sure that I'm audible to all of you.
The audible, sir.
Okay, thank you.
Questions, please.
So now we will talk about when should I raise the funds, right? The when part of the business that you are building. So I will be taking you through the startup stages and the funding options available there, as
I
we
have
have discussed in the previous slide as well.
one question I have here.
Yes.
So, how should I understand that how much money I actually require my investment requirements?
Uh, I guess that will be cleared in the next couple of slides there, right?
Okay.
Uh, if we go through, like if the startup is the, yeah, I think I will be answering that in the upcoming slides as well, right? So the startup stages and the funding options that we have, as Dr. Manu has raised a question that how much money I should be raising and at what stage. So currently assuming that all of you are in the currently the ideation stage or have built the prototypes for your startups, right? So in the ideation stage, the entrepreneur has an idea and is working on to bringing it into life, right? And to make this possible, they have to build a prototype or an MVP, which requires a pretty small amount of funds, right, over there, or depends upon the kind of idea they are having. If somebody has the idea of building you know, a supersonic rocket or something else that will prototype, right? So that is a different case. But considering the generic case, the amount needed for ideation stage to build a prototype is usually small. And that stage is known as the pre-stage, right? Where you are testing out your prototype, building out your prototype, your ideal product format. And that is how you build this at the ideation stage uh, with the pre-seed money. And now how, okay, is it clear now, my voice?
Yes.
Thank you. So the stages where the in the addition stage you can have bootstrapping, where comes the self-financing as well. Growing the business with little or no venture capital or outside investment. So bootstrapping is, you are not raising something from VC firms or from outside people. Either you are going from raising your funds from the friends and family rounds, or you are raising it from business plan and pitching events, right? Just to make sure that you have enough funds available to you so that you can build your prototype and MVP out there, right? So now, once you build the prototype, and here, like this is totally different from every idea that is out there or the founder is building a startup on. So that depends upon the requirement of building a prototype, what kind of prototype they want to build, what kind of raw materials are involved, what kind of like sources you need to build a prototype. So the funding requirement at the ideation stage, that only varies from startup to startup. In the healthcare sector, it will be a different. In the biotechnology sector, it may be different. In the technical, in the IT sector, it will be a totally different fund requirements out there, right? So once you have the ideation stage, you build the MVP. There comes the validation stage. So now at the validation stage, you have your prototype ready. And now you are conducting proof of concept in the market, and you are targeting your potential clients that you have figured out. You are talking to them, you are taking their feedback, whether this product is they're solving their problem or not, right? And the funds required at this stage generally needs to conduct field trials, potential customer feedback, reviewing, and building a formal team. So at the validation stage, you will be talking to your customer. You can also do that at the addition stage just to check it whether your idea is good, it's in need of an R or not. And in the validation stage, you can go for customer feedback, what you have built, that whether they want it or not, or what kind of modifications they are looking for, right? So at the validation stage, you are looking for funds to conduct seed trials, customer reviews and feedbacks, and building your team out there. So at the validation stage, the fund required is generally covers by the seed stage, or we call it the seed stage, right? Yeah, Shivesh, any question?
Sir, yeah, sir, I'm asking how to capture the market in validation stage because we need feedback from our potential users. So how
Mhm.
can we target most of our users and how can we capture the market so that we can get maximum feedback out of people?
So that depends upon the first of all, like depends upon your research on your client base. What kind of client base you have figured out, right? You create a pool of it, right? These are your potential buyers, or these are your target customers. Then you check out where those target customers are available. For example, if you are building something in medical domain, right? So you know that your target customers may be the doctors or the patients out there, right? So you do a smart way in targeting that part. So you reach out to a hospital section out there. You create a form of feedback like, okay, this is the problem I'm solving, and this is what I have built for you. Whether it will be helpful or not, right? So you have to first of all set the target client in your area, what who gonna be buying your product, and then targeting them directly either through physical means or through different channels like sending them requests on emails, LinkedIn's, or getting their contact number from web, messaging them, giving them a form where they can fill, put their, reviews about what you have built for them, right? So these are some of the raw form of activities that usually founders do. That is comes under the field trials, right? You are targeting that.
Sir, so
So
as in my startup, like we are targeting basically the university students or the college students. So we know our
mhm.
target group. So when we are floating our feedback forms in among students and several groups of students, so we are not getting many responses. How to target that particular problem?
Talk one-on-one to the students. Go there, go into the classroom, conduct a pitching session over there, tell them about your product, right? And get it live out there. That is
Okay.
quite possible in your case, right? And we will
Yeah, yeah,
talk more about this in the end, right? We have a specific Q&A session. So
yeah, yeah,
let's go
sure.
through it first, right? Then thereafter, we will be addressing the queries of everyone. Fine, Shivesh?
Yes, sir. Yes, sir.
Okay, thanks. So, yeah, at the seed stage, generally, startups are raising funds from incubators, angel investors, governments, loan schemes, and crowdfunding. So, incubators are the one who assist in building and launching the startup, right? They handhold the startups, they provide them financial support, they provide them the services like office space, admin, and legal assistance to them. They may make potential customer you can say discovery for the startups, and then connecting them to the potential clients. So incubators are the one of the best source for validation stage startups or the seed stage startups, to taking their venture to the next level. And the second is the angel investors. So angel investor is someone who writes down the small checks, right, in return of your equity. What benefit they have? They can ask for a large chunk of your equity on a very small amount because you are currently at the validation stage. The market has not yet proven. You just are rolling out the POCs. You are just getting the customer feedback out there. So angels are the one who just write down the small checks to make the things possible that you are going to do at the validation stage. And there comes the some government scheme in India. We have SISF, Startup India Seed Fund Stream, right, which is collateral free and where you can apply. And government has mentioned it like within 45 days, either they have to say yes or no to the startup, right? So it is a very good scheme for early stage startups as well to ask for the government funding. In the crowdfunding, which is generally happen through online platforms, you are floating out your business to the public out there, and you raise some amount from small checks from individuals out there, right? That happens in the crowdfunding stage. So now, once you validate your startup, now you have signed some contracts with one or two clients, or one or two clients you said, okay, they are ready to pay for you, right? Then you build the product. Then you come across the early traction stage of the startup. Now you have verified your POC, you have modified your product or service that is launched into the market as per the user's requirement. And then your focus becomes on multifolding your revenue by targeting the sales, right? So at this stage, startup will be focusing on the key performance indicators. Generally, we call it KPIs, right? Which are like building their customer base, generating revenue, number of app downloads, etc. Right? And the funds raised at this stage is for growing their user base, product offering, expanding to new geographies, right? So this early traction comes under Series A, or you can say C. Nowadays, like before COVID, the Series A is considered as the early traction where you are moving fast in terms of capturing the market out there. But after COVID, since the market has seen a financial crisis all over the world due to wars and all, so early traction is now maybe considered under the seed and Series A. So It's a in between of seed and Series A, the early traction stage, right? So that keeps on varying as per the market norms. So that is not something very fixed and static that early traction has to be raised Series A. Even some of the early stage, like in today's scenario, early tractions are currently raising the seed round for the ventures, right? So at Series A or seed round, the later seed round stage, I would say, there comes the role of the venture capital funds, right? So the VCs are they are having a very vast portfolio. Like VCs are there are some VCs who can write up to $5 million check. There are VCs who can write above 5 million. There are VCs who can write about around 20 million, right? So here comes the VC gang, which will be investing in your startup for the equity investments, right? So they are professionally managed investment funds that invest exclusively in high growth startups, and they invest generally based on the sectors. They base their investment criteria based on the stage of the startup, the funding amount that you need, right? And in return, they will be asking for your equity and provide you the mentorship, right? So selecting your initial VC fund is just like marrying to a right person in your life. That is very, very important, right? So VC matchup, VC is someone, if you get the good VC, he gonna take your startup to the next level as well, right? So in the next stage, you can ask for Series A from banks and the non-banking financial services uh, to show by showing them the market traction and revenue growth. So you can ask for the funds from these banks and NBFCs. And there comes at the third part, you can also ask for like venture debt funds, right? So venture debt funds is specifically private investment funds that invest money in startups primarily in the form of debt, right? And debt funds typically invest along with angel investors or the VC rounds, right? So they can make a group and they decide to whether to invest in the startups or not in the form of like angels or the VC rounds. So at this scaling phase, now previously you have seen the early traction. Now the last stage, or you can say the growth stage, is the scaling stage where you are multifolding your market growth, you are increasing the revenue, and there comes the Series B, C, D, and E round or at that stage, right? And the amount of funding that is required at this stage depends again on startup to startup, right? What kind of if a startup is having heavy on hardware requirement, they will be asking for more money for setting up their own industries on their own manufacturing plants, getting rid of the contract manufacturing parts. If they are having something in medical domain, so they will be setting up their own laboratories out there, right? So the amount of funds required is totally depends upon the uh, domain of the startup, the infrastructure they require to do that, and the goals they have set for scaling down or taking doubling down the growth to the next benchmark they have set. So at this stage, at the scaling stage, there comes the VC funds out there. There are Series B, C, D, VC rounds that goes from like 100 million to 200 million, 75 million, right? That at that stage. So that is again at the funding at this stage is just to multifold your growth, as I said, right? And they invest in the late stage startup, like after having 5 to 6 years of experience in the market, they have shown the significant market traction to the investor community out there. And they can further, now the private equity investment firms plays their role. They can also show up in the investment round out there. Generally, they don't fund the startups. They are the big fishes, big sharks out there who generally spend amount out there uh, in the fast growing startups. So these are like ideal funding stage and the average check size uh, around the valuation range that the market has given before COVID. Now things are pretty much fluctuating during after the COVID period. So initially, like in the seed stage, you will be having an average check size of $1 million and at the valuation of around 3 million to 100 million. Series A may vary with 15 millions of average check size, and the valuation is from 10 million to 45 million. Series B around 40 million at a valuation of 30 million to 100 million. Uh, Again, this is pretty much different from startup to startup based on the demographics as well. These figures are different in different demographics. US has a different valuation range and as compared to the India, right? And is not applicable to all domains. So the question arises is why do investors invest in startup, right? So investors are generally not looking for a great product out there, right? They are into the business of multifolding their investment. They are looking for that one bet which can convert their investments or give them returns to around 100x or 200x over what they have invested, right? So they are looking for whether this particular startup has the capability of reaching out to a unicorn or not. So investors back startups not for what they are, but for what they can become, right? And they bet on innovation, growth, and the potential to change the world while reaping exceptional returns that they are looking for. So once investors have invested and they have figured it out that okay, this can work and this can become really very big, can give them a unicorn status to the startup. So there comes their exit plans. How they can make profit from their investments, or you can say the returns that they are expecting over their investments. So it is either through mergers and acquisition where the investors they decide to sell the portfolio of the company to other company, or they entice one company combining with another, right? They go for like buyback, sorry, acquisition, or you can say the merging of the companies with the bigger ones out there. So IPO is again one very pretty common. You have seen a lot of startups are hitting up the IPO, Zomato, Swiggy. You have seen in the Indian scenario like they are now preparing for they are now the IPO stage, and the Zepto is now coming up for the IPO as well, right? So IPO gives investors to take an exit, lucrative exit on what they have invested in the stock market in the equity shares of the company, and to make their money and get back out, exit the startup. And they can also exit the startup by selling these shares to the other venture capital firms or private equity firm at a interest rate that they are looking for. And the last option is even the founders can buy back their shares by giving them 10x or 20x of returns what they have looking for, or that terms and condition depends upon them. But founders do buy back the shares of their companies to increase their ownership within the facility, within the organization that they are building. So what key things that they are looking for, the investors, like what are the key parameters they will be looking for investing into your business? The number one is the problem that you are going to solve, right? How big is the problem? uh, Whether people are ready to pay for it or not, is the problem real or not, right? That comes under the size of the opportunity that opens up the door for the market size that they are looking for. The third one is the team, the strength of the team, right? Their education, their experience. A lot of times, yes, it matters a lot, right? Uh, and you will see they will be looking for the level of competition as well. How many competitors are there into the similar domain where you are targeting, and what competitive advantage you have over them that is gonna make you set apart from the others, right? Your plan of attack, how you gonna kill the market out there with your exceptionally good or great product, right? And what current status you are currently having, whether you are at a ideation stage, whether you are at a validation stage, at what stage you are currently having, and the milestones that you have set to achieve them, right? And last but not the least, they will be looking for the financials that you need to achieve the goal, whether it is pretty much affordable or not, right? Like at the early stage. The one book I will definitely recommend to every founder out there to read about is Hard Things About the Hard Things by Ben Horowitz. You can say it's the Bible, it's the Gita for startup entrepreneurs. It will tell you each and everything about fundraise, about building your teams, hiring, right? So I will highly recommend everyone to go through this book. This is something which will open doors, or this is the guide. To be honest, you just have to go through it and check it out. You will figure out all the answers to your queries out there. So, the best thing, uh, the only thing that prepares you to run a company is running a company. That's a quote by Ben Horowitz itself. So, you only know what stage you need what while building your company only, right? You cannot predict that before that. You can plan it out, but eventually hitting the bullseye, uh, it is only possible if you just went out there, you just start your venture, you are into the field, and now everything you will be keep on checking out. Everything will be, you will be receiving the answers to your queries right away when you are into the field, right? So now we are open for Q&A, right? Uh, I'm opening door for the Q&A session over here. So
Yeah,
Vicky has raised the
yeah, Parminder.
yes, sir.
Yeah. So after in this session today, there are participants of Investor Summit. These
Okay,
participants would be pitching their pitch deck before investors on 16th of January, and also they would be pitching their pitch before investors on 3rd, 4th, and 5th of March.
okay,
Immediately after this assignment, immediately after this session, we are going to give them one assignment wherein they would be required to calculate how much money they need as of now.
okay, okay.
So, and again, against that money, how much equity would they be, offering to the investor? So, can you share your views on how to calculate how much money as of now today I require from the investor, and how much equity I should be offering to the investor? Investment calculations, basically.
So
Sorry,
so
what is that? Yeah, investment calculation for my own company as of now, because they have to face the investor on 16th January.
got it. So basically, sir, it depends upon the idea of the startup itself. Like, for example, if somebody is building uh, some product in the healthcare segment, right? They they need some prototype, they need some raw material, so they have to calculate their unit economics accordingly. Like, what if they are having the prototype already available to them, then what are the things required to make it a full-fledged product? If they have talked to the contract manufacturers for their product for initial one or two pieces, or you can say one or two tranches of the products that they are building, right? So that type of groundwork that they have to do for calculating their unit economics, and then they have to build the plan. Okay, now they have the product ready, the validation is done, right? And now they are looking for marketing the product, right? So for marketing, what are their plans for that, right? So there comes a lot of factors which can be, which are very much required at the startup end itself to figure out, like, what are the costs they're gonna bear along with their plan that they have decided, right? So giving them exact number, how much they should be, raising, that depends upon their stages as well. Like for the ideation stage, they probably may be looking for a pretty small amount, depends upon the startup requirement itself, because I'm not aware like what kind of hardware there will be. If the IT company is there, so they will be looking for the best brains or building out their software itself, right? And on the other side, as you asked about how much equity shall I dilute, right, to the investors. So generally, it's the investor who set up the rules, who set up the dilution rules, right? They design the term sheets. They check out the valuation into the market, because as a founders, I have seen that we go with a lot of valuation of our startup. Then eventually VCs, they are into the market. They are into the business of valuations and doing the right thing for the startup. So basically, we pitch something, but they are into the real game. We are interacting with the one VC or the one investor at the time, but they might have interacted with thousands of the startups, maybe in the same domain or maybe in the different domain, right? So they are the one who set up the rules first for the term sheets, and even the equity requirement is based on their their thesis as well. For example, if I talk about the incubators, so generally they ask for around 5% or 10% of your companies, right, on the check size of 20K to 100K US dollars, right? This is what I'm telling about in the US scenario. Whereas in the Indian scenario, you can say that 5 to 10% may be usually being given to the investors for raising around 20 lakhs to 25 lakhs of the amount, right? So that varies.
Hello,
Yeah. So
Parminder.
yeah, Mr. Kalra.
Yeah. मैं अभी ये पूछना चाह रहा था कि अभी जो previous speaker who was asking the queries, I will just add to it whatever he has said. That might be the point he is asking for the new people who are going to join. Okay.
Mm-hmm.
Now, what I thought was he was looking for an answer in terms of a ballpark kind of a valuation system. Suppose the valuation is 100 rupees of the
Mm-hmm.
company. So what kind of fundraising he should be asking, or dilution these sharks they are able to convince to, or they are pounds upon to the the founder. So what kind of if it is 100 rupees the valuation of the product or the prototype, or I am saying anything, the product which is come up, so these sharks will acquire at what price? So that is figure which he was looking for, I think, as a entrepreneur.
Yeah. So that is what I am putting light on. Like, it is at the very initial stage, at the validation stage, it is not us who give a valuation exactly to the investor and ask them to, invest at that valuation. It is the investor itself. Like, if they are interested into the product that we are building, right? They set the first rules. They set the first check rules out there, right? So there
Mm.
comes the negotiation part involved in it. If the investment is pretty low, right? If the investor is manipulating the entrepreneur, right? So there comes the due diligence process involved in that. So it is not us. For example, as you mentioned that 100 rupees the valuation, right? I
Mm.
will go to the investor with the 100 rupees of valuation, right? He will cut it down. He may accept it if I have prepared a complete, roadmap of why the valuation is going to be 100 million. Then it is up to the investor itself. Like, if they are convinced, they are ready to go with that. But for the first time founders like me itself, I have faced this issue. We go to the investors, right? We give them a valuation of what we are building, right? And then they comes up with their own terms and conditions.
No,
And
that's
their
okay.
terms and conditions,
Sorry for interrupting you. I got
yeah,
your point that they will demand. Suppose you have given the valuation of 100, these sharks will put it down to whatever figure they are saying. I am saying in a ballpark scenario, if the product is, and I'm saying above average, I am not saying going to be unicorn or something like that, above average. So what kind of valuation they accept normally? They cut down to what levels in, or it is just negotiation to negotiation. There is no ballpark figure or a range which you can define.
yes, definitely. There is no range and there is no ballpark figure which we can define,
Okay.
because
Okay.
that depends upon the domain in which startup is targeting their product launch, right? The market size,
Mm.
uh, the returns and the growth rate as well. whether the market is currently ready for this kind of product or not. So there are a lot of factors involved, right? So there is no specific ballpark figure which anyone can give. No one can give that. That depends upon startup to startup. That depends upon the requirement. The market that particular
That's
founder is
okay. I
targeting.
got your point. I got your point. Now, my query was slightly different. This was only, I was just adding on to what the previous speaker has said. My query is that I am trying to be an incubator for one of the products of AI to be used in medical research,
Okay.
drug research.
Okay.
Now, this man, I have given him the problems. I am
Mhm.
already an entrepreneur. Okay.
Mhm.
So I have an industry in the
Okay.
medical fields. And I am looking, I know this, what is the requirement in drug research, wherein AI can play a role. And that man is competent enough to, do that. That is what I have realized. So I am trying to be an incubator in terms of, funding him and all that. But my knowledge on AI product which he is going to deliver and what kind of costings, with your experience, you have to give me some figure. What kind of, it's more basically it's based on AI applications to the drug research data which he is planning to do. तो अभी क्या मतलब
Okay.
उसका मतलब क्या उसका आस्किंग प्राइस होना चाहिए, मेरे को बिल्कुल आइडिया नहीं है एआई का प्रोडक्ट
Okay.
के। तो मैं इसलिए आपका जैसे एक्सपीरियंस है और आपका प्रोडक्ट भी शायद एआई का ही है जो आपने लिखा है,
Yeah.
तो हाँ, तो इसमें मतलब इनिशियल स्टार्टअप में प्रोटोटाइप वगैरह जो बनाने हैं उसका क्या खर्चा बैठेगा तकरीबन?
So do you have a co-founder?
नहीं, मैं खुद करूंगा सर। I will make him the founder, co-founder. I'll be the
Okay.
incubator. I'll be the incubator. I have given him the solution. I have requested him that this is the thing which I think we both require. As a new co-founder, he will be part of it. And then we'll develop a prototype which can give solutions to drug research into, it is related to drug research. And it is
Right.
AI-based applications which he's going to develop, which I have asked him. So this is how the current scenario is this. तो उसमें मुझे ये चाहिए था कि अब वो कितना पैसा मांगेगा या क्या खर्चा रहेगा, थोड़ा सा आइडिया रहे इस प्रोडक्ट को, मतलब it's more based on software and I do not know about it, so I am looking for an answer on that, and that's the main
Got it.
purpose of my joining onto with you.
Got it. So, Mr. Kalra, there comes the 2 points. Like as you mentioned that you have the core idea, you know what to build, right? And you are looking for someone to build a prototype for this, right?
Correct.
So here you can partner with the third-party service providers, the software service providers out there, right? You can talk to them. You can sign an NDA and talk to them that this is what you are thinking of building, right? So there are some service providers who provide the right consultation as well, like what will work or what will not work technically and both non-technically,
Parminder,
right?
that exercise has been done. I am only saying
Okay,
now I am not aware of the path beyond that. How much will be my expenses till prototype as well as to the marketing? I know well that I will handle. Once the
okay.
prototype is ready and it is up to the mark, I do not know.
Mhm.
Idea has been given, prototype has to be made, and that prototype should work well. That testing and everything or marketing will be done by me. The only
Correct.
thing is the product is to be made, and I do not have even a single iota of knowledge about that. So
So non.
I have already found a person. Now
Mhm.
what should expensive, and if I am only, that will not work, because a team is very important. If you are
Correct.
entering into some kind of a startup, it is a
Yeah.
team which will work. One man with AI competence hired on salary basis will not work, because
Correct.
somebody has to take on the complete perspective. There has to be marketing team, idea
So,
generation, legal.
Mr. Kalra, basically, I got your point, right? Basically, you are building something, right? You have done the fieldwork research over it, right?
नहीं, अभी बना
And
नहीं कुछ
now
भी,
you,
अभी आइडिया आया है सिर्फ, अभी बना कुछ नहीं है,
Uh,
बंदा मिल गया है जो
sir,
प्रोटोटाइप बनाएगा। अब मुझे खर्चा पता लगना नहीं लग रहा है कि भाई कितना आगे मेरा खर्चा हो जाएगा इसका
सर इस चीज में मैं आपकी मदद कर पाऊंगा, क्योंकि आप अभी आइडिएशन फेज में हो और मैं अभी वैलिडेशन फेज में हूँ। मेरा
अच्छा
जो प्रोडक्ट है वो अभी अंडर डेवलपमेंट है, तो उसके रनिंग कॉस्ट वगैरह मेरे को पता है। सो उसी पॉइंट पे मैं भी सर से यही पूछना चाहूंगा, परमिंदर सर से, कि सर जैसे मैंने मेरा जो मंथली रनिंग कॉस्ट है वो सपोज मैंने निकाला कि 1.8 lakhs to 2 lakhs रुपीज मेरी मंथली रनिंग कॉस्ट है, इंक्लूडिंग माई टीम सैलरीज, नॉट माई और माई को फाउंडर
ये
सैलरी,
कौन
बट माई टीम
परमिंदर बोल
सैलरी
रहे हैं?
ओनली।
ये परमिंदर जी बोल रहे हैं?
नहीं नहीं नहीं,
No.
मैं
हाँ,
आई एम अनदर फाउंडर एंड
अच्छा
आई एम
अच्छा
आई
अच्छा
एम
अच्छा अच्छा
कंप्लीटिंग, बिकॉज यू हैव डाउट कि वेदर मेरा कोई अभी प्रोडक्ट बना नहीं है तो मेरे को किस तरह वर्क करना चाहिए और मेरी कितनी
नहीं,
रनिंग
मेरा
कॉस्ट
डाउट
चल
ये
रही
नहीं
है।
है। मेरा प्रोडक्ट का मेरा ये है कि जो एआई का प्रोडक्ट बनाएगा मेरे लिए वो कितना खर्चा बैठेगा तकरीबन, आइडिया रेंज ले
Uh,
रहा हूँ मैं
Mr.
उसमें।
Kalra, that is totally, no one can right away give you a ballpark idea because I don't know exactly what you want to build. If you want to build large language models in AI, right? Then I
Yes,
will say like,
it is a large language model.
right. So you need GPUs for that, right? You need infrastructure for that, right?
ओके,
So apart
नहीं
from
मुझे
this,
मालूम
you
नहीं
need.
उसका, मुझे नहीं मालूम उसका। और उस
That's why I'm saying that
हाँ
you should go with the technical founder who has the knowledge in this field, right? Otherwise, you will be keep on struggling hard
अच्छा,
to find out or to figure out what's the roadmap ahead.
नहीं तो जो मैंने अभी ढूंढा है ना वो मेरे को कॉम्पिटेंट तो पूरा लगा सर, सही बताऊं परमिंदर जी, लेकिन खर्चे के
Correct.
बारे में उसका नॉलेज जीरो है। तो मैं इसीलिए सोच रहा था कि कोई और आदमी ऐड किया जाए या थोड़ा सा आइडिया तो मिले ना कितना कि भाई मैंने प्रोसीड भी करना है कि नहीं करना। That
Nahin,
is my dilemma. That is what I am saying. But I
no,
should see
now
my
there
budget also,
comes.
no? As an incubator, I should see what kind of investments would be there to begin with, and then so that is why I am asking only specifically just some you know some figure
No,
you have.
definitely. I think for this, to providing you a budget
We can
range
talk
of the.
offline also. ऐसा कुछ नहीं है,
Yes,
since
yes, that is what
there are so many people are there. Why waste others' time? So we can talk offline
exactly.
also. You can just send, just share your contact details as well as this presentation also with me. We can talk offline,
So,
right?
yeah, yeah,
Okay.
definitely. For that, for answering your query, I need to dive deep into your
No,
ecosystem,
I will.
right? What you,
No, I will.
yeah,
I'll share with you because I have yet to take on that journey. So before I embark on that journey, I should know because I am not in this business at the moment. So I am planning
done,
to.
done, Mr. Kalra.
गौतम
Done.
जी
हाँ
गौतम जी
जी,
मेरे
So
ख्याल से
yeah,
हम प्राइवेटली कनेक्ट कर लेंगे एंड वी लेट अदर पीपल
correct,
आल्सो देयर इज
correct. Okay.
प्लीज
Thank you. That is what I said. We'll talk offline. Okay.
शिवेश जी शिवेश यू हैव अ
Yeah,
क्वेश्चन you have a question
yeah. Ankur this side. Mr. Parminder, I want to ask you something. Are you
yeah.
there? Am I
Hi,
audible to
hi.
you?
Yeah, you are audible.
Okay. So, if in any case, in any department, if government is giving some kind of subsidy, okay,
Mhm.
so we are if we are prevailing the benefits of subsidy, then apart from that, is it possible that we can take grants as well?
Uh, that depends upon the terms and conditions of the
बर्फ डाल
subsidy as
दो।
well,
Pardon?
right? The terms and conditions that they have mentioned in the subsidy, that
Okay.
totally depends on it. If they have barred you in, raising any funding or the government grant, since you are already having subsidies, then you can't. But if there is no such clause, so you are open to go for government grant as well. There's
So
no problem.
that means if at center level government is giving subsidy on some subject, okay, then
Okay,
I'll have to go through the document of that subsidy scheme.
correct. Yeah.
It must be written on it.
Yes, exactly. And the targeting grant fund as well. What are their terms and conditions? Because in most of the cases, they just do not provide the grant to the repeated founders for the same grant, right? If somebody has taken the grant for the specific, some specific company has taken the grant, right? And they again apply for the same grant for the same product, they won't get it. So you have to verify at the both end the terms and condition of the subsidies that you are getting as well as the target grant that you want.
Okay, suppose there are two parts in a business. Like in one segment, we are doing a research. So we are availing the grant for a research part. And for
Okay.
other part, the product is already existing in the market, and we are also producing the same product. And we have a customer base of that product. Okay.
Okay.
For that, we have to build some kind of infrastructure.
Mhm.
So if we are taking subsidy on that part and we are availing grant on other part, in which we have to do research to bring our product into the market.
So there comes like two different scenario over here. Like you will get a grant on the product that you are building, whereas if you are setting up your R&D, that is not the aim of the grant that you have picked up. And for that R&D, you can ask for subsidy for the various government schemes, right? So that will target both of the segments. Like for the product, you take out the grant from the government for the product only. But for setting up, if you have already set up the R&D, right now you want to avail the subsidies from the government, then you have to apply for the specific channel.
If for R&D part, I guess for R&D part, grants are the better option because grants are available. These are basically for R&D only, R&D purpose only.
Yeah, that totally depends upon like the terms and conditions of the grants, the terms and conditions of the subsidies, right? So I cannot, specifically comment out on this part, like what you should be targeting, because that totally purely depends upon what terms and conditions government set for the specific grant or the subsidy.
See, I'm still unclear about it. Uh,
Uh, I guess we can connect offline, right? We can talk more in detail, like what kind of infrastructure you are thinking of, because I have raised government grants as well.
mhm.
So that is totally different. That totally runs on the terms and condition that they set up, right? So
Okay.
if we adhere to that terms and conditions, we are okay for that.
Okay, I'll connect you later on.
Sure, sure.
Sir, as
Yeah,
you being a
Suresh.
software as a service based company yourself, so
Yeah.
what were the marketing costs for your company for a month or per year? On an average, I'm not
So
asking about exact number.
yeah. So that totally depends on our target, that what we are setting, right? Uh, like for example, where our client base is, where we will be targeting, right? And
Yeah,
like we internally set up our own budget. Maybe it is around like more than 1 cr or 5 cr 10 cr, right? If we are having b2c business, if we are targeting the normal internet users, so we have to run uh, Facebook ads or social media advertisements, so there's a different costing for that. So basically it works the other way, like we set our marketing budget, and based on that we explore the opportunities out there, that how we can market our product using different tools or different services.
so as I have told you earlier that we are focusing on college graduates or college students primarily
Yeah.
as a initial target. So
Mhm.
as I have told you that also that my running cost of per month is around 1.5 to 2 lakh rupees. So
Okay.
in that 2 lakh rupees, my marketing cost is also included because we are also providing software as a service platform. So
Mhm.
the major cost of running goes into marketing, right? You know that very well. So
Yeah.
how much funding should I be raising so that uh, how much funding should I be raising? Yeah, that's it.
So you have to calculate your customer acquisition cost, that how much amount you need to acquire your one customer, right? This is generally known as CAC, customer acquisition cost, right? So by calculating that, you can figure out your target then. Like for example, if you are targeting specific sectors or specific states within India or outside India, right? Then for that, for reaching out, you just have to check out like how many education institutes are there, right? So based on that, like doing that step by step unit economics, you will figure out that operation cost is going to be probably nearby that figure, right?
Yeah.
And then you can ask for like 2 to 3x of that amount that you are facing or you are seeing.
So, like, let's say my yearly running cost is 20 lakh rupees, just a number. And
Mhm.
how to find like customer acquisition cost? Can you tell me that first?
That depends upon how you acquire the customer. Who is currently paying you? Students, right?
Yeah.
And now for getting that student, what you have spent it. For example, with 20 lakh, how many students you have got, right?
Okay, okay. Like the invested amount over the number of students, right?
Yes, yes. Or the
Okay,
target that you are targeting that, okay, by this number, I will achieve this much, customers in my portfolio.
okay. So let's say in 20 lakh rupees, I got 40,000 customers.
Mhm.
So that is 5,000 rupees per customer.
Correct.
Yeah. So now 5,000 rupees is that per customer cost. So what would I be raising the funds? What amount would I be raising?
Uh, for that, you also have to check out what's the churn rate, whether that 40,000 customers are staying with you or not, right?
Okay.
And so, like, this is a very calculative thing that you have to check it out. And this purely goes with the assumptions as well, right? The fundraise is going to be on the assumptions that, okay, this is my customer acquisition cost, and this is the next that I am targeting currently, right? And if your churn rate is pretty low, then it is very, very, uh, you know, you can say open for you to ask for more, right? If the churn rate is less, so it means like customers are trying your product, but they are not liking it and they are just dropping it out. Then
High
there
churn
comes
rate.
the customer retaining cost as well. How
Okay,
much
okay, okay.
you invest in retaining them as well, right?
Yeah,
So multiple factors are involved, right? We can talk offline after going through what you have, planning to do and what kind of stage you are, so we can have a communication with the what kind of funds you are totally looking for the investments.
yeah, sure. Thank you.
Right. Thanks.
Hello, sir. Hello.
Dr. Gauri.
Yes, yes, yeah. Sir, actually, if you're going for angel investment, we should know the valuation, right? So, how do you find the valuation if you are in the MPP stage?
Angel investments are basically, if somebody is giving you a money, they will, yeah, for example, if when I did my angel round, right, with Alchemist, right? So we pitched our startup to them, right? What we are doing and that, right? So they have a standard criteria. Okay, we invest that much amount at this much post investment valuation, right? So the angel investment is basically not based on the valuation they are specifically that you are presenting to the angel investor, right? They are investing the money to set up your post money valuation, and that is usually considered under the safe round, SAFE, right? We call it safe round.
Mhm.
That is future investment for future equity, right? Safe round. If you just check it out, you will figure it out. That angel investor basically they sign and write the check for the safe rounds. So when the VCs comes who set up the exact valuation of the startup, who set up the terms and conditions for the startup, thereafter their equity is got diluted, the angel investors' equity, right? Till the time they do the safe rounds.
Safe, SAFE. What is?
SAFE, safe round, right?
Okay.
I will send it.
Okay.
Yes.
Fine.
Hi, Parminder.
Hi, is this section?
Yes, yes, yes. सो मेरा एक
Yeah, hi
डाउट था,
section.
हाँ,
Mm-hmm.
कि जिस समय हम प्रोटोटाइप डेवलपमेंट के स्टेज में होते हैं तो वहाँ मल्टीपल
Mm-hmm.
हिट्स एंड ट्रायल्स के बाद किसी एमवीपी पे पहुंचते हैं, तो एग्जैक्टली जो प्रोडक्ट की कॉस्ट है उस समय प्रेडिक्ट करना मुश्किल होता है हमारे लिए। नाउ
Correct.
नेक्स्ट स्टेज जब हम प्रोडक्ट डेवलपमेंट में जा रहे हैं तो बहुत सारी हिडन कॉस्ट हैं जो प्रोटोटाइप डेवलपमेंट में हमें नहीं आई थी। तो
Correct.
स्टार्टअप्स के लिए कोई ऐसी सर्विस होती है क्या जिसने पहले प्रोडक्ट डेवलप किया हो तो वो हमको गाइड कर सके कि इस स्केल तक इतने हार्डवेयर का एज एज इट इज ये कॉस्ट आ सकता है? ताकि फिर हम उसके अकॉर्डिंग अपनी पिच फॉर्म करके और इन्वेस्टर के सामने बैठे.
Yes, there are. So if you go with the hardware development of your product, right, of your startup, then there are third-party service providers. Those are the contract manufacturers. They provide this consultation service. They provide you the information that what are the core components going to involve, what are the packaging costs involved and everything. So they will guide you in that case as well, and they also build your product along with it. So consultation is inbuilt with their services that they are offering.
Okay.
I hope I answer your question.
Yes, yes.
Okay. Yeah. What else, team?
Anybody, any other question? So I think this is it. We have a wonderful session with you, Parminder, and we have thrown light on how, when, and why we should need money for your startup.
Correct.
I thank you again to you, and
My pleasure.
end this session here. If anybody wants to get connected to Parminder, you can definitely contact Technology Enabling Center. We'll be happy to link you with Parminder also. So
Thanks
can
for
leave.
having me, and wish you all the best, team, for whatever you are building. And I'm available for addressing your queries thereafter. So please be open. You can reach out and we can talk more. Right. Thank you so much. Thank you so much, Dr. Manu.
Thank you, Parminder. It was really very nice, and I think this session would empower the participants to calculate investment requirements. So, thank you so much.
Yeah. Thank you so much, Dr. Manu. We can also conduct a one-on-one session with the startup so that I can have a deep insights on what they are building, right? So yeah, that give me a much more wider overview of helping them out in terms of setting up their valuations and all.
या क्योंकि अभी मैंने कुछ पिचेस देखी लोगों की, तो उसमें जो वो अपना इन्वेस्टमेंट कैलकुलेशन कर रहे हैं ना, उसमें मेरे को लगा वो थोड़ी इम्प्रूव होनी चाहिए. इट्स ऑन द लोअर साइड. उनको लग रहा है कि हमारा इतना खर्च इतने में हो जाएगा, जबकि ऐसा लगता है कि उन्होंने कई चीजें वो नहीं इमेजिन कर पा रहे हैं, विजुलाइज नहीं कर पा रहे, कई खर्चे. अब अगर कई खर्चे हम विजुलाइज नहीं करेंगे, इमेजिन प्रॉपरली नहीं करेंगे उन खर्चों को, तो फिर हमारा स्टार्टअप को जर्नी में दिक्कत आएगी ना फिर.
No, definitely, Manu sir, we can sit there and we can have a one-on-one session with the startups over there, right? So I will help them in fixing out, right, what they are doing wrong.
Thank you.
Okay. Well, thank you, everyone. Thanks for having me. All the best for the future. Thank you.